capture business expenses that are legitimate and pay less in taxes. That is the name of the game. Hi everyone, it's Tina with Picture It Personal Finance. And earlier today, I had a conversation with a client and I realized as I helped her look at her QuickBooks, there are some things that she has clearly forgotten, our business expenses, and I wanted to make sure that all of you guys remembered them as well. Okay, so in this video, I will share with you 3 business expenses that I frequently see people forget, and I want to make sure that you are capturing them so that you can reduce your net income and pay less in taxes. And remember guys, this is not tax evasion, this is tax avoidance in a legal way. So capture business expenses that are legitimate and pay less in taxes. That is the name of the game. There are 3 business expenses that I often see people forget, and part of the reason they forget it is because they don't know they can do it, and part of the reason they forget it is because it's kind of an inconvenience to track. The number 1 business expense is mileage. Some people are really diligent about it. I know many apps are out there for tracking your mileage, but sometimes it's just a pain in the butt, especially when you do minimal business travel and instead most of your driving is for personal use. But I will use myself as an example. I have not tracked mileage in prior years. This year I committed to doing it, and I have to tell you, I was surprised. We had one networking event that we drove to that was a very far distance from us. And then on top of that, I had a bunch of other networking events, and my mileage reimbursement is going to be, or my mileage expense is going to be to the tune of about $1,000. Yeah, let's go ahead and reduce my net income by $1,000. Check mark. Let's do that. So remember you guys, especially for those of you who are like real estate agents or photographers, you are moving a lot. You are going to a lot of different places, and you can be reimbursed for that. There are 2 ways to sort of get reimbursed for that. One is to pay for your vehicle and your gas out of your business, right? This would be more so permissible if it's a dedicated vehicle and it's only being used for business or minimally being used for personal. And then there's also the mileage route. For those of you who are in that situation where you have a company vehicle, I actually encourage that you track both and then give both sets of numbers to your accountant and let your accountant decide which one will give you the bigger sort of expense deduction on your net income, right? Which is going to ultimately help you pay the least in taxes. It's really helpful if you've got an accountant that's willing to do those numbers and crunch those numbers for you. And if you don't, maybe it's time to look for a new accountant, because your accountant should be somebody who's helping you think strategically about taxes and making sure that you're aware of the different deductions that you can take. So absolutely mileage. Expense number 2 is insurance, especially for those of us who previously worked corporate and then started our own business. We forget about this, but remember that you used to pay that through your employer before, and that means you can pay through your employer today, even though you yourself are your employer. Now, there are a few rules of when you shouldn't be able to do this. So for example, if you have insurance already through a spouse that's getting it through a corporate position or through an employer, or if you've got, if you have multiple insurances, especially for medical, vision, dental, go talk to your accountant and see if you have supplemental insurance that you have also bought, if you are allowed to pay for that out of your business. But if you only have one source of insurance for you and your family and you are self-employed, that is a business expense. You can cover your medical, your vision, your dental, life insurance, and disability. There are other insurance policies out there that can't be covered. So for example, if you have an umbrella insurance policy, that is not going to be paid for out of your business. But those other ones, think about the ones that were covered by your corporate gig back when you had one. Those same expenses can be paid for by your business. And I'll be honest, medical insurance can be very expensive. I know that I have one client that pays over $500 a month for their insurance, and I've heard other people say they pay over $1,000 a month for their insurance. That can be a really big, reduction in your net income for your business. And remember, you are not taxed on how much money you made overall, and you are not taxed on how much you pay yourself. You are taxed specifically for those of us that are solopreneurs or, sole proprietor LLCs. We are taxed on our total net income. So let's say you have a net income of $40,000, you'll be taxed on that even if you only paid yourself $20,000. So If you're paying yourself $20,000 and then paying your insurance out of that $20,000, you would be so much better served to pay for that insurance out of your business and make sure it's reducing your net income. This is how you will pay less in taxes. And then the last one that I want to bring up, because I see it all the time, especially for people who don't have a bookkeeper, is interest expense. I've talked about this in prior videos that debts that you pay are not going to show up on your profit and loss. They are going to show up on your balance sheet. When you make a payment from your checking account to pay off debt, a portion of that payment is going to be the debt itself, so the principal element, and then a portion of that is going to be the interest. The interest is an expense that you can capture. And, some people are paying a boatload in interest. Like some people that have company trucks. I mean, these truck payments are $1,000 a month. And $200 a month of that is interest. So in that situation, this can really add up. So make sure you're paying attention to the interest expense. So every time you pay a credit card bill, every time you pay a debt payment, every time you pay back a loan, figure out how much of it is principal and how much of it is interest, and make sure you're tallying up all of that interest, and that is a business expense for you. Okay, guys, I'm sure there are a bunch of other ones, and if I can think of any more, I will do an additional video down the road to give you more expenses that you need to be sure you're tracking so that you can reduce your net income. But those ones in particular come up all the time. And so if you are not currently tracking mileage, if you are not currently tracking your insurance or paying your insurance out of your business, and if you are not currently paying attention to how much interest you are spending on your debt repayments, you are missing out. Get that figured out and get that over to your accountant so that you can pay less in taxes. I hope you guys are getting ready for tax season. I know that's one of the tough things with the new year. I'm going to do a follow-up video on different things you can do to be tax ready. So if this is a topic that is interesting to you, be sure to subscribe, and I will see you in the next video. Bye.